Hello, everyone, and welcome to FYI. Today on our show, we have a very special trader, someone who is into systematic trading since the past 14 years. He is a statistics graduate and worked for Infosys for 10 years before he quit his job and started trading full time. He has been a very big figure in the trading world. He's written articles on money control. He's featured as one of the top traders in India. His Quora platform has more than 14 million views. He is the founder of an algo trading firm, which is called Square Off Bots. It's none other than Kirubakar and Rajendran. I'm going to call him Kiru. Kiru, welcome to our show today. Very excited to have you over, and thank you for giving us time and talking to us.
Sure. Thanks, Nilesh. Thanks, no, for inviting me in this session. I'm really excited to share whatever learnings that I've gone through in the last 14 years. I'm really happy to discuss with you today.
So, Kiru, let me start off by asking you the first and the most important question. How did you land up in the stock markets?
The initial journey was really tough, but later on, no, whatever things that really worked back then was like there was no social media platform like Quora, Twitter, and all those platforms were not very active back then, and you did not have enough resources also. So I just started reading Economic Times one day, and whatever things that I know, I learned it, and whatever things I do not know, I started googling about it. Once I go back to my home, and that is how slowly started getting into the markets. So I started with some 5,000 rupees of my scholarship money back then, started investing in equity markets, and slowly started trading. So it was a completely accidental move that happened.
Interesting enough, Kiru, and the biggest takeaway from your answer would be process leads to progress. And I think systematic trading is actually very process driven. My next question to you is again a personal one, and obviously a lot of our viewers will have the same. Tell us, Kiru, what should one do? Like, what are the steps for a discretionary trader to become a systematic trader? Wait a minute. Okay. Before you hear this answer, don't forget to subscribe to the Fisdom YouTube channel. We keep inviting traders on our show, the FII, and only if we get love from you will we be able to get more traders.
There was a constant decision making process that goes into a trader's mind if you're a discretionary trader, because you're not prepared for what is going to happen. Say suppose I'm going long and markets is going up, and I would be happy. All of a sudden, if market starts going against me, I would be in a panic mode. I would not be able to react immediately what needs to be done. So when you're in panic mode, most of the decision goes wrong, and eventually you lose more money. So being a discretionary trader, I lose money, and also now I lose time, and I easily burn out, and it all took a toll on my health. And being I can't being at the moment when I'm a no discretionary trader. So when I move to a rule based trader, all I have to do is I just have to create my own process, create my own rules, just focus on the rules, focus on the process. So when there is a process, there will be a progress. So once I started focusing on the process, eventually everything fell in place. So I'm not sure exactly is there any specific single based approach that is applicable for all traders, but I'll tell what how I followed it, so probably that people could relate to it. So when I started trading, mostly started preferring intraday than positional because of overnight gaps. So it's all about trading based on what you believe and trading based on how comfortable you are. So I was starting from the beginning, I was comfortable with being an intraday trader than a positional trader. So first you need to decide which part that you wanted to focus on. You wanted to be a positional trader or intraday trader. So the type of trading that you wanted to choose. And now once you finalize, okay, I wanted to be an intraday trader. Next, you need to move to an instrument that you wanted to choose. Whether you wanted to be a stock-based trader or you wanted to be an index-based trader. So again, there will be a major difference here is when you wanted to create trading system based on stocks, it is relatively much harder because of two things. So first thing is, say suppose I wanted to trade with list of Nifty 50 stocks. I wanted to backtest a trading strategy with a list of 50 stocks. Currently, there are no Reliance, TCS, Infosys, multiple stocks are there. I wanted to backtest it. I can backtest it now and I see, okay, in the last 1 year, this is how the system has performed. Now, if I have to backtest for the last 10 years, then I need to figure out what were the list of stocks that was part of Nifty 50. Now I need to go and get those historical constituents and then accordingly I have to backtest. Say for an example, DHFL, Yes Bank were part of Nifty 50, and RNRL, Reliance Petroleum were part of Nifty 50. So there will be some stocks that were part of, comes in and goes out of Nifty 50, but you need to check all those historical data and then only backtest to give you a clear cut picture. If you are testing the stocks with current set of Nifty 50, that ends in survivorship bias and it would not tell you the exact results.
I've known that you crunch numbers very often. You're into backtesting of data, and you have a lot of insights on the way the market behaves on particular days, in particular years, and so on. Let me ask you a question in relation to this. After the introduction of weekly options in 2017, can you give me an idea about how premiums have behaved, since then? Of late, we've noticed, it's commonly said Thursdays are the most volatile days in the market. What is your take? What does data really tell us?
Post 2017, after the introduction of weekly option with Bank Nifty, the movement on Thursdays has significantly gone down compared to the previous years. So if I'm checking historical data from 2010 to 2022 for the last 12 years, and if I'm checking day-wise movement, I could see 2017 onwards, the Thursdays has been very, very little. Like you won't see a very bigger movement on Thursdays. Once in a while, you'll see it, but most of the days, the movements are very muted. So it tells me a clear-cut data that because of introduction of weekly options in by 2017 with Bank Nifty, the ranges has been drastically gone down since Thursday being the expiry day. So what I can do is I can create certain non-directional systems on Thursdays because the data suggests that Thursdays it doesn't give you a big movement. And accordingly, I'll go and create a straddle or strangle strategies without which works kind of a non-directional systems. So I'm not directly starting with a non-directional system. I'm first observing how the market has behaved in the past and how the market behavior changed from 2017. And finally, I'm creating a strategy out of it. So this is the actual right way to get started with the system trading.
Wow, that's an interesting answer, and thinking of it, data really tells us things that we normally think of. Interesting enough, Kiru, my next question, just like you, how you are a systematic trader, there are lots of people who actually aspire to become full-time traders. It's a dream for a few people to, leave their jobs or leave the current commitments that they have and become full-time traders. You have done that in your life. You've quit a well-paying job at Infosys, moved out to trading full-time. Tell us what would be your advice for the novice traders, the new traders who want to take up trading full-time.
So I would advise you not to become a full-time trader because only when you become a full-time trader, you will realize, okay, this is not so easy because when you are a part-time trader, you always wanted to become a full-time trader. And most traders I see that they wanted to become a full-time trader because they hate their job. I never hated my job in my last 10 years of my career. I really liked my job and there was so much of freedom. I could take leave whenever I want and it was comfortable, well-paying job also. It is not that just because you hate your job, you have to become a full-time trader. So that is one thing. So you have to find the reason why you wanted to become a full-time trader. And second thing is when a trader is completely dependent on his trading income to deal with his day-to-day life, day-to-day expenses, he will not perform well at all. So there will be immense pressure on him to do well. So suppose during the first 15 days he made money and the next 15 days he loses money, then he'll be in immense pressure. So if he's completely relying on trading income to lead his life, then it will be very, very critical. I mean, very hard for him to be a successful trader on that part. He would have been a very good profitable trader when he was trading part time. The moment he moved to a full-time trader, he'll face most of the traders will face performance issues. So what I have seen and what I have when with whomever I have interacted with the full-time trader, what I have seen is during their initial years after they became a full-time trader, they were not completely dependent on their trading income. Either they had enough savings that they had for at least 1 year or 2 years, so that they are not completely relied on trading income. Otherwise, they had other alternate source of incomes because of real estates, or there could be multiple other source of incomes. So if you wanted to become a full-time trader, my first advice is try to avoid becoming a full-time trader. That is first thing, because being a full-time trader is not only hard, it's a lonely job. Your laptop, maximum you will have your own social media circle, that's all. But when you're at work, you tend to meet people, you tend to go out, you tend to go for a smoke, you tend to go for have a tea. There is certain life that is associated with it. But being a full-time trader, it is like it's all about yourself. But the biggest benefit is like you are your own boss. You don't need to rely on anyone. Like, you, if you wanted to trade, you'll trade. If you wanted to take a break, you take a break. The biggest benefit is you get ample of time. So you, when no, time is money, and people who have time, they are the wealthiest people, I would always say. So it doesn't matter how much you earn from your day job, but if you are not having enough time to spend with your family, with your kids, then still you're not wealthy enough. But being a full-time trader, you had this biggest advantage that nobody has ever had. You can travel anywhere, and you can start plugging in your system, and you can trade. So that is very big benefit. But if you wanted to become a full-time trader, always ask yourself whether you wanted to be a become a full-time trader because you really love this job, love this profession, or you hate your job because of that you are coming here. And second thing is, have a at least for 1 or 2 years, make sure that you are profitable with being a part-time trader. So people think that, okay, I am bit profitable, but if I spend more time being a full-time trader, I might be more profitable. But that is not the case. Being a full-time trader, it adds a lot of pressure. So make sure at least, when I quit my job, I had 2 years of monthly savings, like starting from rent, EB bill, everything I kept aside. And then I wanted to try it out at least for a year or so that if I'm not able to crack it, I'll always get back to my job.
You've been on the other side of trading as well, investing. Not many traders out there actually believe in investing, but you've been someone who's been investing for very, very long. I'm going to ask you a question on investments. First thing, how do you do your investments? Do you back it by data? Are you a fundamentalist? Do you invest when markets are going up, or do you invest when markets are coming down? Tell me more. How do you plan, or how do you decide your investments?
I used to do a lot of things. Like, I used to do analyze based on momentum factors. I read a book called The Dual Momentum by Gary Antosny, where he explained about dual momentum factors, investing on markets every time, only when it dips, or only when market rallies certain time, investing in it. I did a lot of SAP based research articles to find out, okay, instead of investing every month, what would happen if I invest only when Nifty corrects 5%, or when Nifty corrects 10%. I keep saving it, but invest only when it corrects. Or I try to become a momentum based investor, like only when Nifty rallies 5%, then start investing it. If Nifty starts getting into a bear market, don't invest, just stay aside. Or invest only during Nifty bear phases like 2008, 2020. So I tried multiple different approaches, and then finally I concluded that irrespective of all these researches, if you simply invest every single month regularly, on the long run, that is going to help you, generate a considerable wealth. And I read a recent book called Just Keep Buying by Nick. And this book also stated the same fact. Like, he did a huge research with 100 years of data on US markets, and he was able to finally conclude that people who are investing every single month on an index fund were able to generate higher returns on the long run. And I moved completely from stocks to index funds because of one major part. Like, imagine, like, Sensex started in 1980s, or Nifty started in 1990s, and almost 20-30 years we have been into the markets. But whatever the stocks which were part of Nifty 50 during 1990s are not there. Only few stocks are there. And for an example, Dow Jones Industrial Average started in 1800s. And the next 100 years, whatever the stocks that were part of those index during the initial phase, none of them are there now. Companies eventually go bust, no matter how good the company. It could be Kotak, IBM. All these companies were blue chip stocks one point of time, but eventually they go bust. So if you wanted to save money, that too, when you wanted to save money, you shouldn't save just for 10 years or 15 years in a stock. It should be a habit that you keep on doing it every over a long period of time. So you just save it. Saving should just like be an habit. And once you do this, it will have enough coppers when you do it for 30 or 40 or 50 years of time. And you can just pass on to your kids, and then you can just move on with your life. So when I wanted to do it, I wanted to be very, very certain. So I can't be very certain with when I invest with stocks. Nobody could say, okay, Reliance is going to be the next Amazon. It can be the next Amazon next 10 years, but next 40 years nobody knows. So no, when I look back the history, only one thing is certain. one thing is 100% that I'm very sure that it will happen. It is because index will always move up on the long run. Stocks cannot give you that kind of conviction, so something can go wrong because a lot of endpoints could go wrong, but index has this conviction. So when I wanted to invest all my hard-earned money on a monthly basis for a long period of time, I wanted to commit to index investing, which could generate 12 to 14% average returns. That is more than enough to build a huge corpus if I'm regularly doing it. So that is why I completely shifted from stocks based investing to index based investing, because that helps me. Because when market goes down, the first thing that most of the people will do is how their portfolio is performing with respect to index. So they'll say, okay, Nifty is down 20%, but my portfolio is down 50%. No, I'll be sad. If Nifty moves up 50%, if my portfolio is moving up only 20%, again I'll be sad. So this regret will always be there as long as you're investing in stocks and you're comparing it. But when you're investing directly in the index itself, there is nothing to compare. So you'll be happy about it. You will stick to it in terms of no worst case scenarios. So the overall returns, the overall how much ever people are making returns is completely dependent on how you react on few months, like how you reacted on 2008, how you reacted on 2020 during Corona crash decides your overall fortune. So if I have to know these little months is deciding my fortune, then I have to make sure that I'm able to stick to it. I'll have a conviction. And only index investing gives me that conviction. So because of that, I'm investing only in index funds.
So yes, Kiru, I agree about investing in the index, passive investments. Also, let me tell you that we at Fisdom actually promote passive investments. We've been promoting index ETF investing. We've been promoting SIPs and stocks. Also, to invest stocks, invest in stocks through SIPs on us in a systematic way every single month. It's important to be in the markets rather than time the markets. It's always said, right? Time in the markets is more important than timing the markets. So interesting enough, amazing to learn this. Also on a personal front, what I've been doing is I actually put out 20% of the total amount that I want to invest, or the total amount that if I'm selling stocks that I'm going to receive. 20% of that I put into index ETFs. And more often than not, I've seen that sometimes stocks don't outperform the index, but the index ETFs definitely take care of the multiplication. So very interesting one. Guys, there's amazing news for you. The first thing, if you'd like to read any of the books that Kiru mentioned, we have a surprise for you. We're going to give you some of these books, from Fisdom. If you'd like to be a part of this competition, comment on the video. Okay, so first, don't forget to subscribe. Put a comment on the video saying Fisdom for Traders. Our team will get in touch with you, and hopefully you qualify for one of our giveaways. So amazing idea. And Kiru, I really enjoyed talking to you. There's so many questions I want to ask you. I'm sure the audience also wants to ask you these questions. We have an opportunity for that. Yeah. So I'm going to soon announce the dates where Kiru is going to come live on the Fisdom YouTube channel, and he'll be interacting with all of us. I'm very, very excited. If you have questions that you want to ask him, feel free to put it on the comment section. Kiru is going to come live and you can ask him anything. I'm going to soon announce the date on which Kiru will be there. So stay tuned with your questions. Ensure you have the right questions. It could be systematic trading, it could be markets, it could be discretionary, it could be about his journey as a trader. So I'm looking forward to this session. I hope you are too. Kiru, thanks a lot for being giving us time and coming on the FYI show. It's always amazing to interact with traders like you. We're looking forward to having you on our show again. Thanks a lot. Take care and enjoy your weekend.
Thanks, Naresh. Thanks for having me in this session. So even I'm looking forward for this live session. So now I'll update you on the date soon. So once we finalize the date, we'll go live on YouTube and we'll address all the questions related to systems trading from users.